In the story, you describe the adoption of EVs as a new era for the world economy. What's at stake?
There's a lot of money at stake, and there's a lot of relationships that are going to be frayed. There's a lot of jobs that are going to be won and jobs that are going to be lost. Using Bloomberg NEF forecasts, they see the cumulative value of EV sales reaching some $57 trillion worth by mid-century. That's in their base case. If you start to put in some more incentives to ditch those gas-guzzling vehicles, then that number could be $88 trillion in cumulative sales. That's from very low levels right now. So you can see there's a lot at stake for automakers and the economies that are reliant on auto industries.
This rapid change, Malcolm, is causing what you describe as flashpoints across the global economy. Can you give us a couple of examples of how you see this playing out?
Sure. We spoke to reporters right across the world, had lots of candidates for these flashpoints. In the end, we chose just 5. But some of these are flashpoints around the environmental considerations that are in play. Some are right about jobs, and some are about geopolitics. To speak about the latter, a couple of examples. In Mexico, for instance, President Biden's very juicy perks to produce in North America, incentivizing a whole bunch of automakers to set up shop in Mexico with big investment plans to try and boost their sales to Mexico. In the meantime, China's beaten them to the punch. They're ramping up their sales to Mexicans. So that's creating this tension point that's probably only going to get accentuated as elections take place in both Mexico and the US next year. In Thailand, the tension is between the legacy Japanese automakers, which helped turn Thailand into what's known as the Detroit of Asia. Now, as the Japanese scale back, and they've been a bit slow to move in the EV space, the Chinese investment is pouring into Thailand. And that, of course, is being welcomed as Thailand authorities know that they need to keep the jobs flowing there. EVs, we've got to remember, take less parts than internal combustion engine cars, and that means less jobs. So you need to really incentivize investment in battery technologies if you're going to offset that for your industry. For Thailand, that's crucial for keeping jobs and keeping that auto sector as a real driver of their economy.
So, Malcolm, in terms of automakers, who are the winners and losers?
Well, just broadly speaking, from the macro sense, the winners are likely to be the ones that are leading the charge here in EVs. The Chinese EVs are tending to be lower in cost, so we're probably going to see more sales to other emerging economies there. The US EVs tend to be more in the premium segment, so they may be more profitable, but maybe less volume. But overall, if you look at those numbers and they play out as BNEF expect, you know, by mid-century or even by the mid-2030s, we should see EV sales eclipsing internal combustion engine sales. So automakers are not, they're not stupid. They're going to be investing in EVs. There's going to be less investment in the traditional space, and the economies that are slow to work into the EV space are probably going to fall behind.